I'm sorry to say, it's a poverty mindset for you to try and cap your income, cap your earnings because you don't want the taxman to take the money from you.
If it's money coming out of your business, it must be a valid business expense. Maybe not a pair of shoes just because you need to go out.
Exactly.
Welcome to the Wealth Conversation podcast. In this episode, I am joined by Benedicta Egbeme, the founder of BeniRatio Finances. Benedicta is a qualified accountant and finance professional based in the UK. In today's episode, we are talking about how you can balance your personal and business finances if you are setting up a business or transitioning from being employed to a business owner. Before we get started, I'd love for you to introduce yourself and share, what you do, what your passion is, and, a few things that people should know about you.
Awesome. So I'm Benedicta and I tag myself as your favorite accountant. Because nobody likes speaking to accountants and accounting seems boring, but I'm hoping that I'm adding a bit more life to the accounting scene and making it more enjoyable for you, hence your favorite accountant. But in terms of my passions and what I do, I am the founder of BeniRatio Finances, which is all about helping people with their personal and business finance. If I'm honest, I focus mainly on the business finance side, but of course, just by reason of virtue of being in this space, I know quite a lot about the finance space as well. And I started about the personal finance space. And I actually started off in the personal finance space, but I am a qualified accountant. So I have my own accountancy practice, which I run via BeniRatio Finances. So we help you with your tax returns, your company accounts, dealing with HMRC, company's house, all of that good stuff there. We help you with that. And of course, helping you and advising with your business finances, how to make the most out of it, how to do the right thing, stay on the right side of the law, but also plan for the future. So management accounting services, that kind of stuff as well.
Wow, that's a lot. Sounds like you're the person to go to for everything, which is great. I love the fact that you deal with the business finances, but also personal, because I think for a lot of people, at least who are listening to this podcast and a lot of people that I know, there is a conversation about transitioning from being fully employed into running a business. And there's always this period where you're kind of doing both. I'd love us to kind of talk about balancing your personal finances and your business finances, especially when you're at the beginning of the business journey, but then also how do you transition into that and what are the kind of tax things that people should know? So maybe we should start with, what do you believe are the best practices to keep people's personal finance and business finances separate, and why is that important?
The first thing is very simple, and that's literally having a separate bank account, right? Many people, especially if you're self-employed, they just start taking money into their personal account in terms of when they make sales, but they also are making expense payments from their personal account as well. Obviously, when you start a business, you don't always have, a lump sum, that you can use to pay for business expenses. And so, of course, most of the time you're using your salary or whatever other income you already have, which is fine. But what I always advise is that if you can get a business bank account up front, and by the way, this doesn't mean that you have to have a limited company. You can have a self-employed company and still have a business bank account. Or worst case scenario, use a separate bank account that you already have, but that you're not using for your personal expenditure. And so that way, what it means is that when you're making your income and your expenses for the business, it's all going through that one account and you can see the profitability of that business. Even if you are having to pay from your personal account into the business account and then make the expenditure, it's always very good for being able, like I say, to match up how profitable is this business, because you might have your income coming into one account, but if you're paying for the expenses for the business from your personal account, it means you're not matching up the profitability, right? And so having a separate bank account, a business bank account, self-employed bank account, limited company bank account, or like I say, worst case scenario, personal bank account, but that is different, is the first thing that you need to do. None of this having everything all in one space. You can't see the wood through the trees, as they say. So that's the first thing you want to do. And the second thing is a mindset thing. Obviously, it takes discipline and it takes recognizing, like, my business is separate from me. It is me, but it's separate from me in the sense that the business money does not belong to you. So when you're receiving income and you have the business expenses, at some point, yes, you will have the opportunity to take down a dividend or a salary or some kind of thing. But it's not a case of the way it comes in is the way it's spent. What do I mean by that? I see people who you've opened up a business. Let's say you're selling, I don't know, books or something. Someone pays you for a book order, and then the next thing you're swiping your card on Louis Vuitton. How on earth does that expenditure match with that business, if that makes sense? And I always give the example. I say, if you're a shareholder in Coca-Cola or Amazon, McDonald's, these big companies, right? And you have invested in that company, would you expect the CEO of Coca-Cola to be spending your investment money in that company on their holiday? You wouldn't, right? You would probably report them to the FCA or someone to say they're misusing, invested funds. So why do we think that because you are the business owner, you have a right to do that? You don't have a right to do that.
Exactly.
So that's another thing to think about, which, like I say, is a mindset thing. Thinking about your business as a separate entity from you. You don't have the right to just dip in. Imagine going into a corner shop, and just taking money out of the till and going to buy whatever, that's just not how it works, right? So getting rid of that kind of mindset. The other thing I'd say, which is a little bit more technical, relates to taking money out of the company. Of course, you are the primary investor, you are the owner, but there is a formal way. And I think that many people don't realize that there is a formal way to take out money from the business. Yes, they are not that crazy to just spend, the money that comes in straight away, but they do at some point when they start to see the money coming in. I've seen this with many of our customers. They start, putting a lot of personal expenses on the business, and they're not formally, they don't realize that to take money from the business to spend on your own, you need to formally request it either via making yourself an employee in your company, so therefore you have the right to earn a salary, or taking a dividend as a shareholder. And again, there is a formal process to doing that. And of course, there is tax to be paid when you do that as well.
We'll come back to the tax piece. I just want to kind of delve into the mindset piece about, the business is separate to you, right? And having, the separate bank account. So all businesses start very small. So are you saying that even if you're getting the £10 coming into your business, it should be going into a separate bank account? And even if you're going to take that £10 out to pay yourself back or whatever, you have to go through a formal process.
Yes. And now, when I say formal process, don't get me wrong, we're not going to write a book or fill in 20-page document. But what's the formal process, for example? So let's say you've just opened up your new business and you are paying for the website hosting costs. The website hosting costs, let's say, are £20 a month for sake of argument, right? This is what you do. You put the money in from your personal bank account into the business bank account. That was already like a formal transaction, right? And then you're spending for, let's say, Wix or Squarespace or WordPress, whatever website hosting. £20 goes from the business bank account. And then let's say over time you have income coming in. And then, at the end of the year, for example, or even the end of the month, someone pays you for a service, £1,000 hits your bank account. You can calculate, right, I have been putting in £20 every month, let's say for the last 12 months for sake of argument. So therefore the business owes me £240. And so what you do at the end is you then make that an expense. And so you formally take the £240 back from the business into your personal account. And that you're going to be tagging that expense refund for web hosting. Exactly. Or what we tend to do from an accounting point of view is that all the money that I see going into, ABC company, let's say Benedicta owns ABC company, every time Benedicta puts money in, keeps on putting money in, whether it's for hosting, whether it's for office, whatever it is, office supplies, paper, whatever. At the end of the year, when we do your accounts, I can see that this company owes Benedicta, who is the director, this amount of money. And at that point, you can then, if there's profit, take it down and we'll clear the director's loan balance, because there's something called director's loan. I'm going a bit technical very quickly. I didn't expect to go this technical that early, but there's something called director's loan, which works both ways, which is whereby you are paying into the company, so the company owes you. And at the same time, you could be taking money out from the company, and so therefore you owe the company. So depending on how much you've put in and how much you've taken out, that director's loan account or balance needs to be trued up.
It sounds like if anyone's considering starting up a business whilst they're either self-employed or employed, they definitely need to have someone kind of overseeing their finances and transactions. Would you say that's correct?
If you are not that way inclined, then yes. I actually have some customers who are actually great at doing this. And so they literally just come to me at the end of the year and it's like, yeah, here's all my stuff, Benedicta. Can you just help me do the submission, to HMRC or to Companies House? But yes, there are some people who need that monthly check-in, or they need someone looking at them monthly to say, have you done this? What's this? Can you file this? The truth is, at the end of the day, no matter how many professionals you get, no matter how much you pay them, as a company owner, company director, it's still your responsibility. And so this is one of the reasons why at BeniRatio Finances, after having done this for 6 years now, and helping people, but realizing that they don't understand, I've now moved into a space whereby we're not just doing it for you. Yes, we can just do it for you, but I've added on a whole plethora of educational resources. And this is where I'm trying to educate the company owners and the company directors. Because like I say, no matter how much you pay me, no matter how much you pay the biggest, most flashiest professional out there, if something goes wrong, it is still your company and it is still your name on the business at the end of the day. Yes, my name is there and I have my own business and my own name to represent and, make sure I do the right thing. And if I was to do something wrong, I will be dealt with my accountancy body and my processes. But your business is still an institution that needs to have the right name or the right reputation, which means that you should know a little bit about everything, which includes the finances. Right? You can't just say, oh, but I gave it to an accountant. I know nothing about it. When you see the headlines, Ronaldo tax evasion, or you see, who is it? I don't know, P. Diddy or whatever flashy names, whatever celebrity, they don't say the accountant's name. They say the owner of the business or the person who didn't pay the tax, right? So you need to understand it also for yourself. And so, yeah, I have added on some education to make sure that people understand as well.
Yeah, when you're reading about these high profile cases, whether it's a celebrity or a business person, you're right. They always mention the person, not the accountant. And I don't think anyone actually shares that listen, at the end of the day, it's your responsibility. It's not the accountant. The accountant has been paid and they've done their bit. So we need to also double check things and know what's going on. So you've mentioned these resources that you've created to help people sort of manage their finances. I'd love for you to share, if possible, if there's, a couple of budgeting pointers that we should be using for our personal finances and the businesses to make sure that this movement of money is not so stressful and there's possibly, dare I say, a system to it.
There are things you can do, but in summary, obviously we can't go into too much, practical now. It's not a workshop, but in summary, what you're wanting to do is you're planning ahead. And so actually one of the things you talked about, the resources, one of the things I've done, I've got 3 courses. One of them is for self-assessment. One of them is for business owners. And one of them is for just, money foundations, everything to do with, personal finance, budgeting, property, investments, all of that kind of stuff, savings and all of that. But for the business course that I offer and the self-assessment course that I offer, there's a resource that I attached on, and I created this specifically for this need. This is where people are saying, how do I know how much tax I'm going to pay at the end of the year so that I can save? For you to plan, you need to know how much, right? If you don't know that your bill is going to be £20,000 at the end of the year, how do you know how much to save now? Or, if you have no clue that actually you're not going to have to pay any tax and you're kind of saving, but actually you don't need to because, it's not anticipated that you're going to be owing any tax. So this is the area that this resource that I have, which is actually a tax calculator. And you can buy it from my website or, reach out to me and the team or whatever. But what it does is it allows you to put in your income, your expenses for the year, and it calculates in line with the UK tax allowances for this financial year. It calculates ahead of time to say, right, in this financial year, you are likely to owe X amount of tax. So once you know, for example, that you're going to owe £12,000 tax at the end of the year, what do you do now? You start to save £1,000 a month. And so the key thing about preparing in line with your question is about number one, looking forward to what will happen at the end and then starting to prepare for that now, right? When a mother is going to have a baby, she doesn't wait until the day of delivery to say, oh, I've got a baby. Now I need to buy some baby clothes or I need to buy some baby food. No, she's planning from month 1, month 2, month 3. You wouldn't expect to go to a 9-month pregnant woman's house and there'll be no baby stuff, even though the baby's not there, right? So I wouldn't expect that you are having a business and you're about to, that there is tax due. This is not a secret. In the UK, it's all over the news and everywhere. It's not a secret. 31st of January, the tax deadline is going to be due. I would not expect for you to not have some tax savings ready for that payment that is going to be made. So that's what I would say in terms of planning, preparing, and using my tool. Like, I've done the hard work for you, and it was a lot of hard work just to be able to help people with this.
Yeah, I mean, it sounds like it's such a minefield anyway to be dealing with it. So, you're moving money from your personal account to your business account and all the, and there's sales coming out of the business account and the business is owing you money, but there's potentially maybe tax to pay. And just, I welcome anything that simplifies my life and makes things easy, cuts down the time. So in terms of tax to pay, what are the key sort of taxes people should be aware of when they're employed or self-employed, and then also for their business?
Employed, first of all, obviously, there is your income tax and NI. So many people think, they'll say, oh, the tax is so much. Your tax on a payslip is actually a combination of two things. It's a combination of your income tax and your NI, your national insurance contributions. This is what allows you to be eligible for benefits like the state pension, maternity, sick leave, all of that kind of stuff. If you haven't paid enough, then technically you can't draw down such services. But anyways, that is what NI is for the NHS, those kinds of public benefits. And so that is paid at 6% and 8% for self-employed and people who are in 9-to-5 employment. And then you have your income tax, which is where we talk about being in the low tax bracket, basic rate tax bracket, higher rate tax bracket, and additional rate tax bracket. This is the 20% if you earn anything below 50,270, and it's a 40% for income that is above 50,270, but below 100,000, or I should say 125,000. I'm not going to go into the complexities of what happens at 100,000. And then your additional rate tax player for people who are earning 125,000. So that's where that falls into. So somebody might say, I'm earning 50,000, for example, and they might do the calculation and do the 20% and realize that actually, more has been taken from their salary. That's because of the NI. So just to bear that in mind, that's for you. If you're an employee and your payslip, if you have a look, you will be able to see that. And like I say, in my Money Foundations course, all of this is explained for people to understand how pay and tax works. Money Foundations, if you need more help on that. And then in terms of being self-employed, the tax that you need to pay is still income tax and NI contributions. However, it's calculated separately. So rather than it being a case of, oh, your salary is 50,000, then they take the income tax and whatever, and you get whatever is left over. What happens with self-employed is that you have your income from your business, you have your business expenses, and then they take your NI and your income tax from whatever is left at the bottom. And for those two, you both have personal allowance, 12,570, which everybody is eligible to have, that you don't pay any tax on. That means if you literally earn 12,570, you will pay 0% tax, but you will pay NI. So just to remember what I said about the tax being in two different bits. You start to pay NI from about £9,000 onwards. So you will pay a percentage. And then coming to the business owners now, you've got your corporation tax. I'm sure many people have heard of corporation tax, and that is your 19% tax on profit. Now, you see how when I did the self-assessment income or the self-employed income, I said business income minus business expenses and then your tax, right? With your business income from a limited company, it's a similar thing whereby you have your business income, you have your business expenses, you have your tax, and then you have your dividends if you wanted to take out money. If you have been taking out a salary or something like that, salary is a valid business expense, and that would be in the bit. But if you don't have a salary, you're not doing pay slips or anything like that, you will pay your profit, and then technically you are eligible for your dividends. So 19% on profit. Someone said to me one time, oh, but my business, only earned this amount. Isn't there some kind of tax-free allowance? The employed people, we earn 12,570 without having to pay tax. No, that doesn't work on limited company. Even if you have a profit of £1, you will pay 19% tax on your £1. So you will pay 19p tax. And best believe if you don't pay that 19p, they will turn it into a £100 fine. So yes, that's how it works. But having said that, like I said, there are things that you can potentially do to help with that tax bill. Another thing to bear in mind is that if you have profit over £250,000, I have not reached there yet, but I wish I could be there.
I'm sure you'll be there soon.
Amen to that. But if you do earn profit over 250, then you will be paying 25% tax. The bracket goes up from 19% to 25%.
So this is for the business?
Yes, for the business owners.
So something's just come into my mind because I've heard this, especially young people mention this in terms of tax brackets and earning. I'm going to try and keep my salary low so I don't pay a lot of tax. And, I think when someone's starting a business, the aspiration is to be able to generate as much income and revenue as possible. What would you say to someone who's thinking, okay, 250,000, I'm going to be taxed more. So I'm just going to try and keep the, that revenue low or the profit low. What would you say to somebody who's thinking that way?
So there's two things I would say. Number one, I would say, and this is across board for business owners and even employees, £1 extra that you have that is taxed at a higher rate is better than zero. So what do I mean by that? You've earned £50,000 and yes, you are taxed at 20%. If you earn another £10,000, now your salary is £60,000. Please, number one, recognize that it's only the 10,000 that will be taxed at 40%. I believe if you have the right mindset, you need to understand that £10,000 tax at 40%, leaving you with £6,000, still puts you in a better position than only earning £50,000 taxed at 20%. At the end of the day, I can go on holiday with my £6,000. I can invest with my £6,000. I can pay off some debt with my £6,000. I can do many things with £6,000 than you capping yourself at 50% at 50,000 because you don't want to pay higher tax. And it's a similar thing with business. At the end of the day, thousands of pounds more tax at 25% rather than 19% is still better than you capping your income and saying, I just want to pay 19%. Having said that, there are things that you can do as a business owner. Even when you earn millions of pounds. Number one, you can give some of it to charity. Not all of it, but some of it. Number two, there are other ways that you can spend. And the key thing is that you want to be spending back into the business that will help you to earn more money. So for example, why not take your staff on training courses? Why not, do charitable donations and projects? Why not do, food banks or something? Why not buy new laptops for your office? Why not get a new building space? All of those are expenses that will help to reduce your profit. So that way you're still earning £1 million, £2 million, but rather than just leaving the money sitting there, you're starting to invest back into your business. Why do you think that these £1 million companies have such flashy buildings, flashy this and flashy that? Google give their staff free breakfast, lunch and dinner. You don't have to pay for it. Who do you think is paying for it? Why do you think that they're so happy to give them free this and free that? And I'm talking proper breakfast, proper lunch, not cold sandwiches.
Or a croissant.
Or a croissant, exactly. Proper breakfast. Who do you think's paying for it? And what do you think is doing to their profit margin? So I think this comes back to what I was saying at the beginning about mindset. I'm sorry to say, it's a poverty mindset for you to try and cap your income, cap your earnings because, you don't want the taxman to take the money from you. It's an abundance mindset when you think, actually, I want to make as much money as possible. And then I'm going to be smart about how I spend this. I'm going to make this work for me. As a CEO making £1 million profit and you're wanting to reduce your tax, how about some business trips abroad that you can benefit both ways, So yes, you're going to do a staff training in Miami or a staff training in the Bahamas, which your business is going to pay for, but of course you're going to enjoy it, right? So you're going to get a holiday out of it. Last year, for the first time in my business, I was able to have a trip to Dubai, which my business paid for because it was a business trip. I'd never been to Dubai on my own pocket or my own merit before, but the money was there in the business. And so I was able to use it for that. Be creative. Don't just think the government's against me. I want to minimize my income. How can you make this work for you?
We need to be earning that extra so we can give. That saying about giving from your overflow, right?
Yes.
And I think you've just mentioned something that I believe not many people consider, that some of this giving actually benefits the company because it reduces your taxable income. And it's the same if you're employed. You can do charitable giving, or there's certain expenses or costs that come out of your gross salary and reduces your taxable income. So yeah, it's about being creative and having these conversations, right? Because that's how you find out. I mean, I hadn't thought about, the fact that when businesses have these conferences or whatever overseas and they're inviting their staff to go, it's actually, they're benefiting from it.
Yes, everyone's benefiting, right?
Yeah. No, exactly. Everyone is benefiting in one way. It might be that you're getting a free breakfast every morning. That's great. I mean, the amount of money I spend in the mornings before I get into the office is unbelievable.
Exactly.
Yeah, so I wouldn't mind a free breakfast every morning. I'll speak to the powers that be at my work. We've touched on tax, some of the things that we can do to reduce the taxable income, whether it's personal or business, if you're earning over the sort of minimum thresholds. I'd love to know the negative implications for mixing personal finance and business finances, and then maybe also late payment of tax. Yeah.
The negative implications on one side in terms of, let's say you've been paying for things for your business personally, and you haven't put it in the business or recorded it against the business. Obviously, number one, you're spending more money that you could have used to do something else. But number two, your business will end up paying higher tax, right? So remember, I gave the example of all the web hosting costs, right? £240, for example, £20 a month. If you've been spending that on your own, from your personal bank account, your salary or whatever, and you haven't recorded that in the business, number one, that's minus 240 on your end, but the business also has a profit of plus 240. So where the profit should have been, let's say £1,000, if it had been paying for the 240, because the 240 is on your side from your personal bank account, now the profit in the business is 1,240. And so that 19% tax is being charged against 1,240 rather than 1,000. So now your business is paying more tax. Does that make sense?
Yep, it makes a lot of sense. So yeah.
Not putting the money in the right place, you're losing on both sides because you've lost the money and the business is paying higher tax. So there's that aspect. And then the other one is the other way around, whereby, for example, you are constantly taking paying for personal things from your business, or you're constantly drawing down from your business. What happens is that, number one, your director's loan account will be high. And what do I mean by that? That means every time you take money from your business to your personal account, I can see that as an accountant. And so that goes to your director's loan account. And so on the business, it shows that you are owing the business. So number one, your business is not going to have the cash flow or the money that it needs to be able to pay for its own expenditure because you're constantly drawing down. Number two, it looks bad from an investor's point of view. Number three, what it also means is that at some point, if you don't pay that money back, you will begin to pay income tax on that money. Normally, if you have a director's loan for more than 9 months, let's say it adds up to like 5,000 or 10,000. Technically, that's an additional income. And so you're going to need to pay income tax via self-assessment on that money if you don't pay it back. And of course, your company is not going to look good because it's going to have negative, right? Where money has been taken out and hasn't been put back in. There's different negative things that happen when you don't separate things or do things in the right way.
Some people don't actually realize that maybe they have to complete a self-assessment.
Yeah.
Or they've started their small business, it's not generating a lot, and they think that because they're below a certain threshold, of income or they're not profitable yet, there's no need to complete a tax return for the business. I mean, what's the right thing? What's wrong?
So in terms of a tax return, like you say, I hear it all the time. Oh, but we all get 12,000 tax free. I've only earned 10,000, for example, or 5,000. So I don't need to do that. No. In the UK, for as long as you are earning income over £1,000, technically you need to register. So if you are selling cakes, if you are doing hairdressing, whatever it is, income that you are generating that is not via PAYE, i.e. nobody's giving you a payslip every month, you should be registered for a self-assessment. That is, you're getting a UTR number and you're submitting a return to HMRC. Even though your income was only £5,000, they want to know about that £5,000. Don't worry, you're not going to pay tax on it because, like you rightly said, it's below the threshold, but it does need to be recorded in their system. And the truth is, I'll be honest, you don't have to use an accountant, especially if your numbers are quite simple, if you're good with numbers. You can sign up online, go online, register for self-assessment, get your UTR. I also have a course I will plug. I didn't plan to do this, but I'll plug it in anyway. I have a course that also teaches you how to do your self-assessment yourself. Why am I saying that? Because sometimes people are put off by the fact that they have to pay an accountant. And so I'm just trying to emphasize that you don't have to. If you're good with this kind of stuff, you can go online and do it yourself. Put your income in, put your expenses, like it's self-explanatory, the boxes that they give to you. You can fill it in and just do the tax return, declare the income. And of course, you can also buy a course that teaches you how to do it. Or of course, you can just get an accountant to help you do it, if you're concerned that you might do it wrong. So yes, anybody who's earning income over £1,000 that is not via PAYE should be registered and should be doing a self-assessment return every year.
And for those who don't know, could you just tell us, what does UTR stand for?
UTR stands for Unique Taxpayer Reference. And so that is a number that is attached to your name, your address, your NI number. It's just like any other reference number, right? So your UTR is attached to your name that says Benedicta Egbeme, this is her name, this is her income, this is her NI number, this is all the income she's had, all the tax she's paid or due to pay. So it's just like a unique number for you relating to your tax.
And the company will have its own number, reference number as well.
Exactly. Yeah. So the company has its own company UTR, and that company UTR is where you're paying your corporation tax. It's linking your corporation tax to your business, to your accounts, to your profit.
In summary, I feel like it's understand that you and your business are two different legal entities.
Yeah.
Right. And if you're moving money between the two, there must be clear transactions and a reason why. If it's money coming out of your business, it must be a valid business expense, maybe not a pair of shoes just because you need to go out.
Exactly. The amount of things I've seen.
Yeah, I can imagine. Looks like you've got a lot of courses that will be very valuable to people. So get one of those courses. I'm sure even if it's just a refresher, right, it's worth going through.
Just yesterday, one of the people who did the course back in April, I believe it was, he was saying how he has saved £2,000 per month in his corporation tax bill by implementing some of the things that I shared. I did a webinar earlier this year, back in March, I believe it was, and I had some of my customers who had, we had helped them to save thousands of pounds, £14,000, £24,000, £4,000 just by doing things with their tax properly. So yeah, that's another one that you might want to have a look at.
Yeah, definitely sounds like it. So just thinking about professionals and entrepreneurs as in the person and not the business, right? Because we've spoken about the business previously. What are some of the deductions that they overlook?
Especially if you're a professional, it does depend on your field. When I say a professional, I think of people like doctors, lawyers, people who have to pay subscriptions, like annual subscriptions. Those are things that you can claim back if your employer is not covering them for you and you're having to pay them to maintain your licenses. Even things like uniforms, those things that you're having to use for work, you can technically claim those back. So professional fees and subscriptions, uniforms, for nurses, for example. Also, charitable donations is one. A lot of people that I speak to give to churches, for example. those are things that you can claim back via your tax return. I have to caveat, though, that it does mainly work for people who are high rate taxpayers. That's where you're able to claim the 20% difference. So your pensions as well, if you're doing extra contributions to pensions, charitable donations, subscriptions and fees, licenses, those kinds of things. I think those are the big ones. Of course, we all know about working from home allowances, travel if you have to go on a business trip, or if you have to travel as well for your training, those kinds of things. Basically anything that helps you to continue doing or maintaining your job. Those kinds of things are expenses. Not going to work every single day, so not your commute and not your lunch, but additional things that you're having to pay for. Those are the kinds of things that you can claim.
I'm just wondering if there's somewhere where there's a list.
You can go on my website. If you download the frequently asked questions document, you will see a list of eligible business income and expenses. Self-employed and business, to be fair.
And then another tax question, similar group of people. So, employed, self-employed. Are there any tax credits that you get being a business owner?
No, I'm not aware of any tax credits that you get for being a business owner. What we do recommend is that as an employee, self-employed person, once you start to earn around 51, 52, 53,000 pounds and above, if you're thinking of opening a business, then we suggest that you open up a limited company. So for example, let's say you're a 9-to-5 employee, you're already a high rate taxpayer. We advise that you open a limited company because obviously the tax in the limited company, the 19%, is lower than you having to pay 40% tax on all the money that you earn. And similarly, if you're self-employed, once you get into that 51, 52, you're going to start to pay. The reason why I don't say exactly 50,270 is because obviously you've got the accountancy fee, right? If you're only earning 51 or 52 and your accountancy fee is £2,000, it doesn't really work out. But once you start to earn like 53, 54, 55, the cost of doing the accounting does still outweigh you earning it as a self-employed person. So that's when the benefit would be for you to open up a limited company and earn your money via the limited company.
When I set up the limited company, it was to separate the monies, right?
Yes.
And not thinking about some of the tax benefits of it. So it sounds like once you go over a certain threshold, so if you're a high rate taxpayer, there's a lot more that you can do maybe to reduce your tax, the amount of income you get taxed on. This is when you now need to start thinking about self-assessment and filling out those tax returns.
Yes, so the self-assessment is not needed if you're a high-rate taxpayer and you don't have any other income. The self-assessment is needed when you have additional income that is not via your PAYE. The only time you need to do a tax return as a PAYE employee, even though you might not have additional income, is when you are earning over £100,000. So if you are still earning between £50,000 and £100,000 and you don't have any other income source, just your job, then technically you don't need to do a self-assessment. But people may choose to do a self-assessment because of some of those things that I talked about, the charitable donations, the pensions, all of that kind of stuff. But it is not compulsory.
And just sticking with the tax returns, what are some of the common pitfalls that people end up getting themselves in when they're filling out the tax returns themselves?
I can't say when they're filling out the tax returns themselves, but what I can talk about is lack of records.
Okay.
So lack of separation, the amount of people that have had to do some very horrible digging through of accounts to try and get the evidence, to try and get the income because they weren't keeping a record. Just even if it's a spreadsheet, just open it up. Every time you spend, just put it on there, just keep a record because it gets really tricky. In 12 months' time, you're trying to go through 12 months worth of bank statements to find your business income and expenses. So keeping adequate records. I had to decline a customer who claimed that she had earned X amount of money and claimed that she had spent X amount of money. And when I asked for the evidences of this said amount of money, there was nothing to show. And so for me, that was a red flag. And I had to say, well, if you can't evidence it, then I can't put it on a document, because when I do the document, it becomes a legal thing, right? It becomes a legal tax return document that you can use to get a mortgage, apply for loans or whatever. If I can't see the evidence, then I'm sorry, I can't submit that. And don't get me wrong, there might be some accountants that can and will, but that's not how I operate. And the thing is, even if they will do it now, 6 years that HMRC have. They can go, so we're in 2024 now. Technically, HMRC can still ask you for income and expense documents, receipts, evidence for your financial year 2018, 6 years back. So you can get away with it now in 2024, but in 2030, they could technically still ask you for the documents. So you want to make sure you have the right evidences and you're keeping them.
And what are these documents? Is it invoices, bank statements?
Exactly. Invoices, bank statements are easier because obviously, hopefully online, you can get it via your thingy, but it's the invoices, the receipts. If you've been buying stuff online, keep the receipts in a folder, in an online folder I'm talking about. If you have physical receipts, take a picture, save it on your OneDrive, save it on your Google Drive, wherever you decide, in your Dropbox. Just have the physical receipt so that you can evidence that on this day, I spent this amount for this reason.
And show where the money came out of. But if it's for the business, it should have come out of the business account.
Exactly.
Wow. Record keeping. So people need to be disciplined and have some sort of structure in place, definitely, to make sure that they don't get caught up in some of these pitfalls or when they get investigated. Okay. I had no idea that HMRC could look back 6 years.
Oh, right. Really? Yes,
no,
they can.
I didn't.
Yes, they can.
I know they can investigate, but I didn't realize that they could look that far back.
Yes.
Have there been any high profile cases that you know about where someone's business has been investigated? HMRC have looked back 6 years and...
Funny enough, not, I wouldn't say high profile cases.
Okay.
I've definitely had customers who have received letters from HMRC that have gone back a couple of years where they're saying, oh, we've reviewed your accounts and, we see it seems like you didn't pay enough tax or whatever. And therefore you need to pay now. Not up to 6 years, I'll be honest, but I definitely have seen them go back a couple of years. Yeah.
That's definitely a reason to be organized and keep your money separate.
Yeah.
I think the last thing is just, you mentioned it right at the beginning, mindset. Work on your mindset. If you think you understand something, just double check your understanding because it might not be the complete information. And I think it's important that we touched on the fact that some people feel that they don't need to pay tax, but actually they may not pay tax. Yes. But they need to report their tax implications. This is a question I ask all my guests. So I'm going to ask you, what is the one wealth conversation you would like, I'd say, individuals who are in that position of starting a business and having to use their personal finances to run their business? What is the one wealth conversation you'd like them to have?
The wealth conversation that I wish people would have is, number one, protection and generational wealth. So number one, as a business owner, you should be protecting yourself. If you are the sole person, whether you're self-employed or a limited company, if you're the sole person in your business earning money, going out, doing the contracts, doing the work, blah, 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 and that's what you're living off, that's what your family are living off, or it's a, sizable contribution to your household, you should be protecting in case of emergencies, in case of accidents, in case of anything. And so we're talking about things like income protection, sickness protection. Heaven forbid, if there was something to happen to you that would mean that you were not able to fulfill the needs of that business to continue bringing income in, what would happen to you? What would happen to your family? What would happen to your spouse? I wish that people would think about this more and not just do business, make the money. And then, because I've seen it where negative things happen. And then all of a sudden that person can't do the business anymore. The income is not there. A thriving business crashes down to zero because someone was not able to put systems in place as well. So this is linking it. And this is why I say protection in terms of your income. So for example, if you were sick, there's insurances that can pay you the equivalent of what you were earning, but also protection in terms of getting other people involved in your business so that it doesn't start and end with you. You shouldn't be the alpha and omega of your business, basically. There should be someone else in the business that can keep things ticking along. I remember the first time I was able to go away, and I know in the early stages it might be hard, but the first time I was able to go away to another country for, I think it was 10, 13 days, And my business kept on running. My customers didn't even know that I was out of the country. For me, that was like a milestone point, because it was like, okay, without me, things can still happen. And that's what I mean by protection, protecting your income from, if something happens to you, being the bottleneck, and then that's not able to happen anymore. And then the other thing that I would add in terms of, and why I said they're highly linked, is also generational wealth. Again, many people are making money. I want to earn 6 figures. I want to earn 7 figures. How are you protecting that money and making sure that that money can also be given to your children or to the next generation or whoever you desire, your niece, your nephew, if you don't have your own children, so that money doesn't just stop with you? And I want to talk about income protection, or not income protection, life insurance. Many people don't do this. And I will tell you that life insurance is a valid business expense if you have a limited company. So you can sign up to something and that can help you reduce your profit. In terms of making sure that your money is transferred over to the next generation and you're not leaving your children or your nieces, your nephews, whoever family members with debt. You're leaving them with an asset, and income and generational wealth can be protected and handed over via things like life insurance. I'm not a financial advisor. I'm an accountant, so I won't advise on that, but I would advise that you do speak to a financial advisor and see what your options are. I think that this is an untapped area. We're all about making the money. Sometimes we don't think about the passing over of the money or how we can make that money work for us. Just paying monthly on a life insurance policy could do wonders for, your loved ones when you're not around.
I think those are 2 great topics for people to discuss, and very, very, very needed. The insurance piece, I find, even with just people who are employed, a lot of people are not considering that. And as you say, it's probably the easiest way to save for the next generation and pass money over to the next generation. But also you benefit from it if something unexpected happens. Thank you so much, Benedicta, for all the gems you've shared with us. Please, could you let me know how listeners can get hold of you?
Yep. So BeniRatio, BeniRatio Finances.com is my website. You can have a look on there, send a form via the contact form, or click on the work with us or work with me. Also, you can check out my Stan Store. Stan Store is where I have all the courses, or if you want to book a one-on-one technical consultation with me. So it's Stan Store /BeniRatio Finances. Of course, on Instagram as well. That's where I hang out most of the time in terms of social media, BeniRatio Finances, and also on TikTok and sometimes on Twitter. BeniRatio Finances.
I'm there following you, getting some tips. So I encourage my listeners to also follow you on social media. And thank you so much, Benedicta. That was fantastic.
No worries at all.
I'll definitely be downloading one of those courses.
Feel free. Feel free. Thank you so much for having me.
Thank you for listening to this week's episode of The Wealth Conversation. I hope that you have learned as much as I have from Benedicta. She has shared so much useful information. And don't forget to go to her website and see if there are any courses or programs or even downloads that would benefit you or someone in your network. As always, please like, share, subscribe to this podcast, and please let me know if there's any topics or if there are any people you would like me to interview on this podcast. You can send me an email at info@thewealthconversation.com or send me a DM on Facebook or Instagram at The Wealth Conversation. Until next time, stay wealthy in mind and spirit.